the Bank of England is on the brink of making a significant decision regarding interest rates. The much-anticipated announcement from the Monetary Policy Committee, that is MPC, is scheduled for November 7th, with most expectations pointing to a potential reduction in the base rate from its current level of 5% to 4.75%. This shift comes after a promising inflation report, where the Consumer Prices Index, that is CPI, dropped to 1.7% in September, well below the bank's target of 2%. For the first time in more than 3 years, inflation has fallen beneath this target, sparking hope that the MPC will take action to ease borrowing costs. The last rate cut occurred in August, when the base rate was reduced from 5.25%. Before that, the Bank of England had kept rates at their highest level in 16 years, to combat rampant inflation. The sharp rise in rates was aimed at cooling inflation, which had reached levels not seen in decades. However, as inflation begins to show signs of retreating, many experts believe that the MPC could take a more cautious approach and start easing rates in a bid to stimulate the economy. For mortgage holders, especially those whose fixed-rate deals are coming to an end, the prospect of falling rates is eagerly anticipated. A reduction would bring welcome relief to those who have seen their monthly repayments climb dramatically over the past year. On the other hand, savers may not be as enthusiastic about a rate cut, although they will likely appreciate the drop in inflation, which means that their savings will retain more value. Despite the favorable inflation data, the recent UK government budget has raised concerns about the likelihood of consecutive rate cuts. The budget's expansionary measures, including a £70 billion boost in public spending and significant tax increases, have some economists worried that inflation could remain higher for longer. As a result, the anticipation of a second rate cut in December has diminished, with some analysts now predicting that the MPC will adopt a more gradual cutting cycle, potentially limiting the extent of future reductions. Markets are closely watching how the MPC reacts, as they have already priced in a rate cut for November. However, the outcome is far from certain. A close vote is expected, with some members of the MPC still cautious about the impact of government fiscal policies. The market is also adjusting its expectations for 2025, with fewer rate cuts anticipated than previously forecast. In summary, while a 0.25% reduction in interest rates looks likely for November, the path forward is unclear. Inflation is slowing, but there are still concerns about economic growth and fiscal policy. The MPC's next move will be crucial not just for mortgage holders, but for investors and the wider economy as well. With only 2 meetings left for the year, November's decision will set the tone for monetary policy in the coming months. Stay subscribed for more videos.